Hi there, welcome back. Thanks so much for still staying tuned to Market Fatafat. You're watching ET now. Let's keep on going with all the stocks. Now on the technicals, let's welcome Sameet Chavan, the Chief Analyst, Technicals and Derivatives at Angel Broking. Sameet, thanks so much for taking the time out and joining us on the show today. Before I get to your stocks for the show, I have to ask you, big event tomorrow, Union Budget. So what are your picks for the budget and which space or which stocks seem exciting to you right now? Sameet, am I audible?
See, as far as budget picks are concerned, so we are expecting volatility to increase, and some of these stocks have already moved quite a lot. So here, LIC from insurance space is certainly looking good. This stock has been bucking the trend. If you see its price action in last couple of weeks time. Importantly, in this rally, the volume participation has increased substantially. And looking at the slightly broader view, we expect the stock surpassing 1200, 1280 kind of mark in coming weeks, or probably 1 or 2 months time frame. So we like LICF. Overall, the stock has confirmed its accumulation pattern, has given a breakout, decisive breakout with sizable volumes, and hence we expect the stock heading towards 1280, 1320, which would be our medium-term target for this particular counter. And as a trader, one should keep a stop around 1036, because 1050, 1070 we are seeing as a very strong.
Okay, that's the word coming in on the budget picks that Sameet is watching out for. But also, let's bring on board the management of ICICI Lombard. We have Mr. Gopal Balachandran, CFO and CRO at ICICI Lombard General Insurance, joining in with us right now. Sir, good afternoon. And what I want to talk about is the wholesale tilt is something which is a little concerning when we're looking at it for some of your investors. What's your take on that, and how do you see this business in terms of growth and risk? And do you think higher wholesale tilt may impact the claims ratio?
So if you refer to the commercial lines, I think, as I said, at this point of time, from a commercial line standpoint, what we are seeing in the market is a couple of things. One, the pricing regime is kind of largely flattish, or maybe to some extent there is actually a reduction in price that the market is experiencing. And that's the reason when at these times, we tend to take a slightly more guarded stance in terms of our ability to kind of grow that book. And that's why I talked about from an ICICI Lombard standpoint for Q1, the commercial lines have been largely in line with the industry growth. Though in some of the segments of commercial lines, we have been able to get to a market leadership position as well. But having said that, I think the key thing to watch out for commercial lines as a category is some of these catastrophic events led losses. For example, there could be flood losses that could happen across the country, etc., etc. But that's the nature of the business that we are in. I think the key thing to watch out for is how many cat events is the industry experiencing. And in general, even within that, if you see from an ICICI Lombard standpoint, relative to our market share, in each of these catastrophic events, our share of losses have been lower than the natural market share that we have had as a company. And hence, to that extent, we believe we have been kind of reasonably risk selecting the portfolios quite well.
All right, Mr. Balchandran, this is Snehi also joining in. Let's talk about your loss ratio, specifically in the motor segment now. You've indicated a lower competitive intensity, and that has led to an overall fall in the loss ratio. So do you anticipate competitive intensity to stay low for the foreseeable time frame? Because some of the new age players seem to be going aggressive using technology and also showing healthy growth on this metric. So what's your outlook when it comes to your company's particular metric?
Again, that's a great question if you were to ask me. But again, when you put this in the context of the outcome that the industry is exhibiting on motor as a category, which is the second largest in terms of revenues, the combined ratio for the industry, even if you look at the FY24 numbers, because industry's numbers typically comes at a quarter's lag, it is still elevated at 118%. 118% running the book for the industry combined ratios is very high. And that's the reason why, in fact, if you see across many of the players who were very aggressive in the earlier time cycle in the last couple of years, most of them have started to kind of look at moderating their growth numbers, particularly in the context of motor as a category. and hence the ability of these players to continue to lose money on combined at those levels, we believe could be a bit challenging from a market standpoint. And that's the reason why over the last, I would say, 3 quarters, ICICI Lombard has actually been able to kind of outgrow the market, specifically in the context of motor as a segment. Going ahead, I think that's something again which we will continue to kind of look for, as in to say that we would watch for how the growth numbers are playing out in terms of new vehicle sales, and the ability of us to continue to risk select and pick up the right risk segments is something that ICICI Lombard will be kind of very, very closely watching for.
Right, you know what? Also, investors are expecting, everyone is watching out for the budget tomorrow. So, some of them are speculating in terms of some positive announcements that could come in, tax relief in the form of increasing limit for health insurance segment. What is your take and expectations from tomorrow's budget?
Honestly, the way I would kind of put forth is, I think we are just possibly slightly, maybe less than 24 hours away in terms of the announcement. And honestly, one would obviously wait for the actual announcements to play out. But honestly, I think, as I said, two factors. I think in general, I think the regulatory environment and the thought process from a government standpoint is also to kind of make insurance as a destination wherein it can attract a lot more stakeholders to come and participate in, given the levels of penetration that this sector exhibits. And hence, any such announcements which will further fuel the increased opportunity for attraction of capital into the sector, it will be a great welcome. And equally, if there are announcements that will help in improving penetration of the overall market, those are some things that we'll be very, very closely watching for. But as I said, honestly, we'll wait for the actual announcements to be done maybe 24 hours from now.
All right, all eyes are going to be on that union budget. But Mr. Balchandran, coming to your portfolio now specifically, let's talk about the health segment. Your growth has been roughly 21% this quarter. Now, we believe you have had new products like Elevate, where you've showcased extensive use of artificial intelligence for insurance products. So, what's your take over there as well? Can we expect more such innovative products to drive your growth? What are your plans on new product launches, if any?
So I think that's again a great question if you ask us, because retail health again has been a segment of preferred focus for ICICI Lombard. And that's the reason we have been continuously looking for as to how we can create an experience for the customer, which is very, very positive. And that's the reason maybe towards late June, early July, we did come out with this new health insurance solutions, which is called Elevate, keeping in mind exactly what you rightly mentioned, in order to create a personal experience for an individual consumer. Because as you know, because health insurance impacts at an individual level, every customer, he or she may have a preference which is significantly varied. And that is exactly what this particular health insurance solution does. It creates a personalized solution for an individual consumer, depending on what coverages that he or she intends to take, and correspondingly what he or she expects as an outcome insofar as the claim experience is concerned. And that is significantly powered by AI, because at the back end, we have created various personas which will be able to kind of identify an individual requirement and possibly give a solution which will kind of largely mirror the expectation of that individual consumer, rather than trying to create something which kind of works for people at large.
Okay, that was, thank you so much, Mr. Balchandran, for joining in with us on ET Now and, giving us a perspective in terms of ICICI Lombard, what to expect going forward. On that note, we'll slip into a short break. Don't go anywhere. We'll be continuing the stock journey after the break. And you're watching Market Fatafat on ET Now. Let's keep it going with all those buzzing stocks. And Sameet, to you for the next one. Kotak Mahindra Bank reported a miss in terms of the numbers that came in this time. But on the technicals, what's the word coming in for Kotak?
Yeah, in fact, on technical front, the stock was consolidated, last week. If you see, 1860, 1870 was acting as a resistance, and we had, anticipated this breakdown to happen. As a disclosure, we had given a, put option to our clients last week itself. Although today the target has been met, overall the chart structure has been, dented a bit. if you see 1800, 1780, which was acting as a very strong support, which coincided with the 20-day exponential moving average as well. The stock has managed to tank below this important support level convincingly, and now it is challenging its next important cluster around 1740. So if the stock manages to slide below 1740 also, we could see this correction getting extended towards 1680, 1660 kind of zone. So overall, within the banking space, specifically in private banking space, this is one of the underperforming stocks, and it is continuing to do so. So till the time this stock does not surpass 1860, 1870, this underperformance is likely to continue. And on the higher side, 1780, 1800 would now act as a very strong resistance.
So that's the levels to watch out for on Kotak Mahindra Bank. Thanks for sharing those views with us. Let's move on, talk about a big buzzer today, and that's Anantraj. It's been consistently up 8% since morning, and even as of now continues to hold on to those levels. Now shares of Anantraj surged as much as 10% early after its subsidiary Anantraj Cloud Private Limited announced the signing of an MOU with Google LLC. Now, as per this MOU, both companies will collaborate to provide data center infra in DC managed services and cloud platform to various public and private enterprises. Through the MOU, both parties also intend to develop innovative tech solutions for potential customers, and both parties will also collaborate closely to assist customers in developing purpose-built AI-infused solutions for data infrastructure, productivity as well as security. And neither any financial consideration nor a timeline has been shared by Anantraj for the MOU, but this MOU itself is exciting enough news for the street, and the stock is up almost 8% as we speak.
Okay, let's move on to the next stock. And Ansh, Nippon AMC, why is that in focus today?
Yeah, so the stock was up around 6% in the morning, then it corrected. Still, it's holding on to gains of around 2%. Company has reported its numbers, and their revenue is up by over 40% from 329 crore to 466 crore. Also, the net profit has seen a good jump of around 42% from 222 crore to 316 crore. Margin has also seen good improvement from 60.2% to 66.4%. EBITDA has also gone up by over 55% from 198 crore to 309 crore.
So that's on Nippon Life. Let's move on. Sameet, you've picked out ITC. Tell us how this stock is looking like to you on the charts, because last 6 months absolutely flat, not much happening on this stock. So now what's the momentum you're penciling in?
Yes, if you see the last 6 months action, yes, it was flat, but considering the recent price action last 10 to 15 odd trading sessions, the stock gave a blended move from the levels of 430, 435 towards 480. After giving a sharp rise of nearly 12-15 odd percent in such a short span, this stock found resistance around its previous important cluster of 480, 485. And since morning, this stock is under pressure. We are seeing some signs of exhaustion around its important resistance level. So at least with the short term, probably a couple of weeks time, you would see consolidation happening in this counter. So consolidation with slightly negative bias. So this profit booking may extend towards 455, 450 also. But with a slightly broader view, this price correction or consolidation should be construed as a good buying approach.
Okay, let's move on. And Snehi, I think the next stock we should highlight also is RPG Life, right? That's also seen a good move today in trade.
Absolutely, very good moves coming in on RPG Life as well. Let's first take a look at what the numbers were looking like. Quarter one PAT has gone up by 21%. Revenue also up almost 12%. EBITDA margin also has expanded, coming in at 23.6% versus 21.8% on a year-on-year basis. EBITDA also healthy 21% uptick coming in on this front as well. 39 crores versus 32 crores this time last year. What's important to note is the management commentary. What they've said is international formulation business is now registering healthy double-digit growth, and this is what has got the street excited, right? Because API business is also showing promising growth, shaping international formulations and API businesses to emerge as the second and third growth engines for the company is what the management's focus is going to lie on. And they're also on course to modernize both API and formulation plants by infusion of significant capex, and they're also working to build a smart product pipeline going ahead. So on the back of these numbers, and good set of numbers and very optimistic commentary coming in from the management, the stock is up almost 5% as we speak.
Okay, let's move on. And on the technicals, Ashok Leyland, Amit, that's the one you're picking out for us. What's the chart indicating for this one?
So the stock has been buzzing since morning. Recently, we witnessed some consolidation of my profit booking as well from the high levels of 245. Stock slipped into a consolidation mode, but since morning, the kind of price and volume activity we are witnessing, it seems that the stock is now finding its mojo back. Price wise, it has managed to surpass a small resistance zone of 230. So from here on, 242 levels can be retested in coming days. So it's a good buy at current level considering the overall risk to reward ratio kind of concept. As a trader, one should keep a stop around 224, and we would expect the stock retesting its near-term resistance zone of 240 in coming days.
Buy rating coming in on Ashok Leyland from Sameet. But you've picked out JSW Energy, and yet again it's an earnings candidate. So take us through what the numbers look like.
Yes, and the stock is trading slightly in green. Actually, they have reported revenue of around 2,879 crore, which is down by around 1.7%. Net profit has seen a good jump of 80% from the 289 crore to almost 522 crore. Whereas if we talk about EBITDA margin, here we are seeing good improvement from 38.7% to 49.2%, whereas EBITDA has also seen good jump of 25.2%. We have a brokerage note from Jefferies as well, and they have maintained buy rating. They have also hiked the target price from 690 to 840 rupees, which is around 18 to 19% from current market price.
Okay, that was stock number 15, JSW Energy, and that was the last stock for today. So thank you so much, Ansh, as well as Sameet and Aditya, for joining in with us today on a Market Fatafat. But with that, it's a goodbye from Snehi, myself, as well as the team who put the show together. But do not forget, and keeping up with our budget conversations, let's hear out Himanshu Chaudhary, who's Deloitte India, on a view coming in on the budget expectation for tomorrow. Listen in to what was the word there.
Sustainability is a very key agenda in the country's nation-building efforts. Financial services players must play a pivotal role in combating climate change. Incentivizing investments in green bonds and renewable energy can help India achieve its net zero emission targets. Lastly, financial services players must play a critical role in combating climate change. Incentivizing investments in green energy and renewable energy can help our country achieve its target in this pivotal growth agenda item of sustainability and climate change.
If you like this video, then like, share and subscribe to ET Now.